Alrighty, folks, how are we today? My name is Andy Tronson, and today we're going to be going over the BORR Drilling Limited Q4 2020 presentation, which was actually just presented today on February 26th, 2021. So, very exciting stuff here, and I'm really excited to get into it. Positive earnings outlook, beat the EPS, which was really exciting, or I guess the expected EPS, EEPS. So that was very, very good. And I kind of want to go into the presentation and what exactly we're looking at. So let's kind of hop right into it. This is the highlights of Q4 2020. So I'm just going to kind of break things down for you guys just so you have a good understanding as to why BORR is looking really, really good for 2021. The highlights of Q4 2020, which kind of already knew a little bit from the last presentation, but the total operating revenues of $60.2 million with a net loss of $46.7 million and an adjusted EBITDA of $6.6 million for the fourth quarter of 2020, which, obviously we want revenues to be higher, but we forgive them for 2020 being a just awful year. So we are definitely expecting a large increase over the next coming quarters in terms of revenues. On October 5th, 2020, so this is just the second one is basically just there was an equity offering, and it does actually increase all the way up to 46 million, which is really, really good. And then on top of that, they're also entering agreements to divest its remaining 3 non-core drilling rigs, which, allows, for, the fact that, you don't want them just idle. So, make some money off of that. So I think that's a really good money decision from this company, especially considering their debt obligations, which we'll definitely get into. And I think any cash flow or any generation is really, really key. And I think that's what's really going to be so pivotal to this company existing long term is its ability to deal with this debt. And we have to really be aware of that. And that really means the next 2 years are going to be probably the most important years for this company. So definitely want to keep a very heavy eye on BORR here. And right here at the end too, awarded 8 new contracts, which is really, really good. Obviously, that means, money's coming in, expected revenues. And I think those are going to really kind of just, go up. That's just my view, leading into Q1 of 2021. So I think we'll definitely be very interested and very eager to see what happens there. Some key financials, obviously, they're definitely still looking to improve, but I think that there is a growth, even though it is marginal between quarters, which I think is really good. And even though, yes, full year operating revenues were down from 2019 to 2020, I think that we can say that, it wasn't as bad as I think a lot of people thought it would be. And on top of that, I think that there is a lot of room for the company to grow in 2021. So I'm expecting full year 2021 revenues to be a lot higher. Total operating expenses actually raised up too, which, a little upsetting, but it does seem to come down a little bit at Q4, as well as operating losses, which was really, really good. And essentially, it's positive right now with the EBITDA, which is definitely something we're interested in. In terms of their assets, we see a little bit of a slight decline in assets. Obviously, cash was increased, which is good, but their liabilities also increased. So it's a little upsetting to see the assets, to see it's a little bit damaging on their balance sheet. Let's be honest, guys. 2020 is definitely going to look a little bit like a downward slope, but we really have to remember what 2020 was to the oil and gas industry, and really try not to put too much weight on BORR as a company with shortcomings. I think that this was still a fantastic. I think this was still they did what they could with what they had, essentially. But yeah, it's definitely one of those things where we have to really be thinking towards this has to be a good year, folks. So we really want to stay on top of this company if we're staying invested. So going into the next slide, we have achieved significant liquidity improvements. So we kind of already went over this, but essentially we want to look at this last little column here, deferral of additional yard interest payments of more than 130 million, and other cost deferrals of 25 million until 2023, which gives them a pretty good runway of liquidity there. A little bit of breathing room, and it's looking like There's a deferral of rig deliveries from early 2022 to 2023. And it's looking like there is an equity raise of about 46 million, if we remember that correctly. So that's really good. Definitely good to see that equity being raised. 46 million, that's nothing to laugh at. I think that's definitely a solid number to go forward into 2021 with. Definitely, altogether, I think liquidity has been very much improved, and I think that they did a really great job with that. And it really, like I said, it's going to really matter how 2021 and how 2022 shape up. And if oil prices stay up and, Biden, whatever Syria is, well, I'm not exactly sure how Syria is going to impact, but I mean, we could always make the speculation and the justification of stating that Syria could lend to, an increase in offshore drilling. It could, if it becomes more and more difficult to get into the Middle East, which, it could be possible. So this is just the fleet status, who's being used, who's not being used. And I think that we're starting to see that there are, definitely, more fleets being used. But what we do see, the biggest thing we want to look at is that we have this PEMEX stuff going on here, and we really need, all of 2020, we have 1, 2, 3, 4, 5, guys, 5 from PEMEX in 2020. We really need those payments to be made by PEMEX, and there's still some going into 2021, but we really, really are going to want those contracts paid by PEMEX. It's going to be really, really big. And I think that the lack of payment on that is also affecting the 2020 balance sheet. So I think that's definitely very interesting to see. So going into now, we can see this is the extension of some of these contracts, and I guess just Pemex is it's really, really good to see that we could see here 2020 there was already contracts into 2021, and here we have 2021 booked up really well. One thing I'm not seeing as much is obviously we like the fact that we have these options leading into 2022, but at the same point in time, I do want to see more kind of locked in 2022 and more long-term contracts. So I think that's really going to have a big impact with Pemex and how they do. And I think if we can get payment from Pemex and we can get them, on the same page, I think we could really see something good happening. But ultimately, 2021 does seem to have quite a few contracts. It's definitely, it's definitely going to be an interesting year, and we definitely want to watch this closely. We want to see if they get more contracts, and we want to see if these options are exercised. That is also a big part of this company. So something to look at. Why modern rigs? I really like this. This is my favorite reason for liking BORR, is the fact that they all have modern rigs. They're not legacy rigs. I remember someone in the chat had once asked, like, wait, why don't we invest in Shell? Why not Shell? Well, there's a reason why we don't go Shell, because Shell has all legacy rigs. And the way these charts are looking is that it's essentially going to become scrap metal. So I think it's something that's really, really important, that, like, look at this, down 88, with the pre-2000 old rigs. So, they're just going to get scrapped, which I think is something that, is going to definitely impact their ability to get contracts and generate income when they don't have the rigs to do so. And which would also require a forward investment. And I think that's something that, is just a little bit more difficult to do now, given the state of the market, and the returns. So I think that with returns slowing down, it's good to have the modern rigs kind of already in place. So very, very big. I like that. I like that a lot. This is really cool. The amount of contracted rigs in the first half of 2021 is looking like, obviously you want to have all of your rigs. There's still a lot, I think, that can be used. But, we'll see what happens here. Essentially they need to be making at least $80,000 per day with all of their rigs to have about $14 million in revenue. And you can see how that goes down if it goes 90,000, because, it's also, it's a little bit of a dice roll too, in terms of how much oil do they actually get to. So that's also a big part too. So very interesting, very interesting. And obviously, increased oil prices are just going to make these numbers look better. So this is definitely something we want to keep an eye on. And the fact that they have a decent amount of contracted rigs, I think, gives them a little bit more breathing room to feel profitable. And obviously not at full strength yet, but look at what happens if they can get to full strength. You know, full strength, 23 rigs, $100,000 per day. That's $277 million. That's huge, guys. So obviously, you know, listen, we're starting at 14 right now, right? But our goal is 23. We have 23. Let's try to get to 23. You know, if we can start seeing a slow growth towards that 23, I think that we have a very serious chance of really eating at this debt, you know, and doing a really great job with that. So I am excited about that. Cash flow potential. Obviously, this is something that I just kind of going over, you know, they have a lot of potential to do extremely, extremely well. Given that the jacks get up, we need to have more jacks. So, you know, it's definitely something that can do extremely well. But we also want to know that, you know, there still needs to be that demand kind of, you know, within the company to kind of justify having those many rigs operational. So that's definitely something we want to watch. We want to watch the demand for oil kind of rise, and I think that we will start seeing that in 2021, and if not through 2021, definitely through 2022, as travel definitely is going to start opening up again, and gas prices should start rising. But we shall see. That is the reason why it's an investment. You know, we have to invest into something, right? So these are just the key attributes, which we already kind of went over. I do like this new one where oil price of excess $60 a barrel is driving activity, and increased utilization will be impacting day rates. Guys, that's huge. Oil prices go up, their day rates go up, and the better chance that they're making more money, and they already have some rigs, or at least they have at least half of their rigs operational, which is really good. Obviously, there's a market preference for modern jackup rigs. Very, 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 very key in terms of getting those contracts. Increasing market share, very, very big. And the company and shareholders are well positioned to benefit from an upturn in the market. And I agree with that. I think that's a really good point. I think that an upturn in the market is going to be, you know, kind of inevitable with oil, and especially the big sell-off that happened. So I think that there is still a lot of really great things kind of coming BORR's way. But like I said, if you're in it just for the stock price and you're in it for like trying to make money in a year or whatever, try to get rich real fast, you know, this isn't really that company. I think you can definitely make a lot of money, and I think that the company will see a big stock price range. Like I said from my other videos, is I would say about $10 towards within the next year, but you know, I mean, it's up to you as to exactly how you want to play it. You know, there's going to be offerings along the way. You know, it's something that, you know, once again is, you know, with these small cap stocks, there's going to be a lot of volatility, and there's going to be a lot of movement and a lot of uncertainty, and you know, you have to be willing to kind of put your head down and focus on what matters. And so far, you know, just reading this over, I think this was a really, really great earnings outlook. So very excited to kind of, you know, continue with this company, and, you know, nothing but good news here. Obviously, we still have the problems with the debt, and that's a big issue. And then, you know, PEMEX too. So there are problems, but if we can just stay focused and know when those problems become irreversible, right? Understand when we need to pull out if PEMEX doesn't pay, if they don't get the contract extensions into 2022. We need to really have a good couple years here, you know, considering we got that debt right around the corner. So with that being said, guys, that concludes the presentation. There's nothing left to be said. Have a great rest of your weekend, and you know, I'm glad you stopped by. Please join the Discord. There is a BORR only channel there where you can kind of talk to people who only are or who are, you know, largely invested in BORR, or at the very least are discussing the benefits, the pros, the cons of the company and whatnot, and the oil industry in general. But like I said, the Discord is in the description, and I hope you guys have a great rest of your weekend. Okay.